The following program sponsored by Adams Financial Concepts.
About Money, a different approach to investing you won't hear anywhere else. Your host, Mike Adams, is a registered investment advisor and works with investment portfolios exceeding over $100,000 in net worth, and has a proven track record of managing long-term investments surpassing the markets in the long term. The information shared on the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's Mike.
It's Friday, and we're going to be talking about money. I have a question for you to begin the program. In your opinion, or my opinion, more bluntly, in my opinion, what do you think is the greatest achievement of the Obama administration in terms of the economy? What is the greatest achievement? I'm going to give you my answer later in the program, so don't go away. I said this once before, but I want to repeat it today because I think it applies to what we're going to be talking about and where we are today. What is the greatest achievement of the Obama administration, whether you like him or don't like him, whether you like what's going on or don't like what's going on? I think there's one thing that's going to truly be great, and it's going to be great for the economy. That's coming later. I want to begin because this last week I was at a conference with 2,500 of my best friends, or 2,500 of my friends. It was once again this year. Every year in May I go to this same conference, and the conference is a presentation by a number of well-known newsletter writers and panel speakers, people that you would probably recognize their names. Maybe you subscribe to some of their newsletters. Maybe you have seen them present in conferences before. And at this conference, there's a whole exhibit area. Now, it wasn't a huge exhibit area, and it was a lot smaller. I think it was a lot smaller this year than it's been in the past. In the past, there were a lot of exhibitors that were being put on, exhibitions that were being put on by oil companies trying to get people to invest in drilling projects, oil projects. There were still quite a few with gold. There were still quite a few with some of the other things. But most of the oil drilling projects didn't show this year for probably good reason. I don't think they would have found a lot of activity. But the biggest exhibits were those for traders. I mean, exhibits that were maybe 30 feet wide with all sorts of screens and colored charts and handouts. Lots of activity going on. They were the trading stations. And testimonials by people who said that they made money using this trading system. You know, it doesn't say how much they made, just that they made money. And it was not a group of people who were tracking their performance. It was a group of people that just in the activity of trading stocks was their reward. And if they made some money, that seemed to be positive. But I don't think any were tracking what they were making. When you listen, and I stood by and listened to some of the discussion of people talking about the stochastics, of the momentum, of the moving averages, of all those things that you look about in terms of trading, technical analysis. And they didn't mention performance at all. All they talked about were trading cost, effectiveness of trading, the searching for stocks to trade, all the possibilities for essentially day trading. That was a big part of the exhibits. But in addition to the exhibits, there were a number of presentations, room after room of presentations, primarily by newsletter writers. And then for some people that paid an extra fee, there was a VIP session. And I've always done the VIP. I've been doing the VIP for 5 or 6 years. And it's a private session. So instead of going from room to room to room, the speakers come to you. And then there's a very big lunch with a panel of speakers. And in almost all the sessions, they give you the stocks that they are recommending. Now, this year, I don't know for what reason it was, but I got to sit at the table with the speakers. Now, let me give you the picture of what it is. At the main luncheon, there's a panel, and there were 4 speakers and a moderator. And they go up, and the table, the panel where they sit, is on a raised stage. And during the lunch hour, they sit at a table, and they have their lunch, they talk among themselves, and then when it's time to do the panel, they get up from the lunch table and they walk up on the stage to do their presentation. Well, I don't know why. There was one spot left, and as I walked in to the room for lunch, and there were probably 250, 300 people at the lunch. Out of that group of people, they picked me. Why they picked me, I have absolutely no idea. But they picked me. So I sat at the table with the main panel and the main speakers for the conference. And I sat and I listened. Most of the time, I didn't have a lot to say. I was mostly listening, trying to see what they were saying. And from that, they were talking among each other. They had listened to each other. They go from one conference to another conference to another conference. So it's pretty much the same people going from Las Vegas to San Francisco to Orlando to Vancouver, BC, to London, wherever these conferences are being held. Houston, Boston, all those different cities. Probably once a month they make that trip. And as I sat and listened, they fed off themselves. It was kind of like listening to groupthink. And these speakers are people that have been in the business for 20 or 30 years. They've been around for a long time. And they've been writing newsletters for almost all that time. And the general feeling is a lot of worry. A worry that we've been in a bull market for 6.5 years. The Dow bottomed in March of 2009. It's been going for a long time. They've had questions each year for the past 3 years about when the market was going to crash. You know, as I sat at that lunch and listened to them, and I'd never been at the lunch table with them before, they were still talking about the market and how it was propped up and how they had that gut feeling that there was nothing really supporting the market. Now, in the past 3 years, I've talked about this as well, because they talked about the market melding up, and when the Fed quit buying bonds, when QE2 and QE3 came to an end, the market would simply collapse. Then when the Fed was going to be raising interest rates, the market was going to collapse. And this year, they didn't understand exactly what was going to propel the market down, but they were pretty sure it was going to go down. I didn't say a lot. I believe just the opposite. But it's a fairly negative group. And I believe that we're in a secular bull market very similar to 1982 to 2000. That was 18 years, not 6.5 years. But they've broken it down into smaller segments and looked at it as a bull market, in between corrections. So if you break it down that way, you know, that bull market that started in 1982 and went to 2000, you could break that down and find smaller bull markets where you had corrections in between. The famous correction, 1987. Then you had one in 1991, and then you had one in 94. You had those corrections that were taking place. But if you look at it in longer term perspective, it was a secular bull market that went for 18 years. And I believe we're in the same kind of thing today. But they were sitting and looking at what was going to bring the market down. And they were pretty negative. You know, the thing that struck me about what they were saying and the presentations they would make during the 3 days of the conference is they were talking to people, and in that group of people that were listening to them, the VIP people, all of whom had a fairly significant portfolio securities. Any number of those people were buying a few of the stocks that were recommended, but they were also thinking about getting out of the market or getting into cash. Dalbar does its report and looks at a study of all mutual funds. Now they have it for 30 years. For someone that 30 years ago would have invested $100,000, the average mutual fund investor would be at $286,000. Had they just left the money in the Standard & Poor's 500, an index kind of fund, it'd be worth $2.1 million. So as these people talked, and as people talked about being heavy in cash, not being fully invested, they were missing out the performance. But they weren't talking about performance. They were listening to what the speakers had to say. I've talked about Tetlock, Philip Tetlock, who talked about experts being wrong much of the time, most of the time. Tetlock is one of the experts on forecasting. And he's done studies over a number of years where he found that the experts are right no more often than throwing a dart at the dartboard. There are some experts that are good, but the ones that are most recognized in their field, and those people that were on that panel and doing those presentations are the most recognized, and they tend to be wrong. I write down notes, and we'll be back after a commercial break, so don't go away. We got a lot more to say. Don't go away. Got a great guest today as well.
About Money with Mike Adams will resume in a moment on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Lots of people manage investment portfolios. Just a few can manage a successful portfolio and provide exceedingly great service to their clients. Here's Mike Adams from Adams Financial Concepts.
We believe the price you pay should be based on the performance of your portfolio and the quality of service you receive.
Mike, it seems that a lot of companies subscribe to the one-size-fits-all mentality of investing. Does one size really fit all?
Not with us. Every portfolio that we manage is customized to fit each particular client's objectives and risk tolerance. We place our clients' interests first in all portfolio decisions.
If you're looking for a home for your seven-figure plus investment portfolio, call Mike Adams of Adams Financial Concepts, specializing in creating and maintaining wealth for over 20 years. 206-903-1019. That's 206-903-1019. Or log on to adamsfinancialconcepts.com.
We're back with more About Money. For details on what you hear on today's show, visit adamsfinancialconcepts.com. Now, here again is Mike Adams.
Welcome back. And I've been talking about the conference that I went to in Las Vegas. Tended to be very negative. But the most negative person of all was a person who you may have seen. If you read the book, The Big Short, or saw the movie, The Big Short, he was the person, Peter Schiff. He was the person who went to Las Vegas trying to raise money to short the collateralized debt obligations, those toxic assets. He wanted to raise money to do that, so he went to Las Vegas at a big show where there were like 3,000 people talking about these CDOs. And part of the time when he was there, he met a stripper from one of the clubs, and he said to her, when you bought your house, did the bank ask you for your income verification? How do you verify your income? And she said, which house? I have 5 houses and a condo. And he knew right away. There was no income verification. He knew right away what was one of the big issues going on. But he made a presentation that was astounding. Not outstanding, but astounding. Like astounding presentation. Because he did have one big hit. He made it on the CDOs. He made a lot of money on CDOs. But now he's come back with a presentation that I believe he's completely wrong on You can make the decision for yourself, but I believe he was completely wrong. What he had to say was this. He said that the Fed has been propping up the economy and the stock market, that we never, ever came out of the recession. We're worse off today than we were at the bottom in 2008, 2009. The average American is worse off today. The average American is worse off today. He believes that the Fed, in order to maintain what's going on, is going to have to do a qualitative easing to buy more bonds in the market. And it's going to be bigger than 1, 2, and 3 combined. He believes that the Fed, in doing that, and the Treasury, in doing that, is going to have to issue bonds, but no one is going to buy the bonds. He says that the dollar fundamentals have never been this bad, never will be this bad. The national debt as a percent of GDP the national debt is awful, $19 trillion. He didn't talk about it as a percent of GDP. We're nowhere near what China is. We're nowhere near what a number of other countries are. The national debt is something like income. If you have a greater income, you can afford a bigger mortgage. The national debt is like that. It's not like a human, a person who has a finite lifetime. A country has an infinite lifetime, pretty much. But still, $19 trillion seems like a lot of money. It is a lot of money. The national deficit, he said that the deficit was huge. If you look at it, only a few years ago we were talking about a $1 trillion deficit. Now it's half of that. He talked about manufacturing was being destroyed in this country. You know, the numbers don't support that either. We have more manufacturing today than we did a few years ago. And he talked about the trade deficit, that we owe all these countries all this money, and they're never going to be able to collect on the debt. So they're not going to buy our debt. They're not going to buy our bonds. He says that the jobs numbers that are being produced showing 3% or 5% unemployment are completely fake and false, because everybody is working 3 jobs, part-time jobs, 3 jobs, 4 jobs, and the national government has counted that as 3 jobs, not 1 person. Statistically, it doesn't work that way, but it doesn't talk about reality. He says that printing drugs or printing money like the government's doing is just like a drug addict. You have to print more and more and more, and eventually you hit bottom and it all comes out. And he's saying that's what's going to happen to the U.S. economy. The dollar is going to be worthless. Nobody's going to want the dollar. You know, he makes it sound almost like Zimbabwe. Zimbabwe's inflation ran to the point that if you want to be a trillionaire, just buy Zimbabwe income, because it's like $1 trillion Zimbabwe dollars to every U.S. dollar. But that's what he was saying. But he finished his presentation by saying, we're passing out a card. All you have to do is fill out this card, and we'll tell you how you don't have to go through any pain, any struggles. We'll get you all through it. You know, and there were people in the room that were filling out those cards. Now, how many of those people will actually invest their money with him? I don't know. But the picture he painted in the hour he was there was one that was so, or could have been, so scary. If you just listen to what he had to say, and he does a great job. He's a great charismatic presenter. If you just listen to what he said and how his presentation went, you'd be running for the doors. You'd be hiding money in the mattress. But even if you hid the money in the mattress, it would be worthless anyway. And if what comes to pass is what he describes, we have much worse problems than trying to protect wealth. That's where he was. It reminded me of some of the others. Granville, who in 2009 said that the Dow was going to be 1,000. Or Roberts, who in 2010 predicted that before 2010 we were going to have a market crash that was going to be so bad we would never, ever, ever recover. Or Mark Faber, who predicted hyperinflation like Zimbabwe's, $1 trillion to 1. Or Lombardi, who predicted the great crash of 2013. That's what Schiff was doing. I think he's completely wrong. I think we're in a position that we're going to see a bull market, a secular bull market that's going to take us in a similar amount as we saw 1982 to 2000. Now, in August of 1982, the Dow hit a new record of 1,000. It had been close. In 1966, it had hit 999.6, and then it dropped, and it rose again almost to 1,000, but then it dropped again, rose again to almost 1,000, dropped again, then almost to 1,000, dropped again. Some people were saying it was going to drop again to zero. Instead, in August of 1982, it went through 1,000, and it set off a secular bull market, which took the market from 1,000 in 1982 to 10,000 in 2000. That's a 10-fold increase. If we see the same thing in the next coming years, and I believe we probably will, we're going to see the Dow go from that 10,000 mark to 100,000. I think it's very possible. I think it's very probable. We're going to see that. We're going to see setbacks, just as in that time period, 1982 to 2000. We saw 1987 a tough time. We saw 85 a tough time. We saw 91 a tough time, 94 a tough time. We saw all those things happening during that run, but it was a very long run, a very secular run. And we're going to stop on that. I'm going to come back to talk about one of the elements that was important for that run from 1982 to 2000. Talk about maybe the greatest accomplishment of the Obama administration. That's coming later in the program. Both of those are coming. But I want to remind you, if you like what you hear and what I have to say, we have a blog on adamsfinancialconcepts.com where I go into more depth than I talk about on the program. And you can like us on Facebook. You can follow us on Twitter. We are tweeting even as we speak. The tweets are going out. And I provide news and articles related to what I talk about on money. I do e-newsletter as well. So you can find us, Twitter, at About Money Radio, and at Mike Adams, AFC. You can like us. You can follow us. And if you have any questions about what you hear on the show, you can tweet at About Money. We'll answer even on the show if you tweet. So, but I want to change gears now. I want to introduce our program. I think we have a very fascinating program or interview today. It's Abe Claiborne here, the co-founder of Two Doors. Welcome to the program, Abe.
Thank you.
So, Abe, let's start with your background.
My background is I spent approximately 20 years in the music business in various positions and disciplines, if you will. I guess my first major job out of college was working for Universal Music Group in Washington, D.C. as a artist development representative, where I basically focused on sales and marketing and artist relations within a regional territory. Mm-hmm. And then from there, I spent approximately 12 years at Universal in higher degrees, ultimately moving to Los Angeles and becoming the director of artist development and college marketing for Universal. And from there, I went and moved to Seattle and linked up with the agency that provided music for major brands like Harley Davidson, American Eagle Outfitters, DSW Shoes, and then I was the VP of label relations there. Then from there, I went to a startup called Lively as the VP of music, where I booked bands and did a lot of licensing and contracting for them. And then from there, I decided to peel out with a great partner of mine to start Two Doors Management and focus on transitioning, focused on businesses that want to work with the music industry and helping them along.
That's great. We're going to come back and talk about two-door management right after this commercial break, so don't go away. Abe's got a lot to say and a lot of information that you want to hear. Don't go away. We'll be right back after this commercial break.
More About Money coming up with Mike Adams on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's adamsfinancialconcepts.com.
700.
Now we return to About Money. There's more information waiting for you at adamsfinancialconcepts.com. Here again is your host, Mike Adams.
So I'm here with Abe Claiborne, the co-founder of Two Door Management. So let's start with Two Doors. Why the name Two Door?
Well, the name actually stems from a couple things. There was two founders, and also when we started, there were two sides of our business. One side is we provided executive support for technology companies and other companies that are looking to work with the music space, mainly from a licensing, marketing, operations, and strategy kind of standpoint. The other side of our business is we worked directly with musicians and artists and helping them to grow their careers through various means, whether it be management or as an agent or just help them with marketing as well.
So, and when you say Two Doors, I want to make it clear that it's not T-U-D-O-R. It's two, the letter two, and door like in open the door.
Yes.
Two Door Management.
Yes.
So let's talk about that because music has really changed over the years.
Yeah.
I was involved as chairman of the board of Seattle Theater Group, and over the last 20 years, we've seen dramatic change as music became digital. It was 20 years ago where artists went out and did concerts to promote their albums. Today, they do albums and singles to promote their concerts. The money has shifted all around. But that's also made a change in the amount of money that comes into the recording studios in terms of per capita. The numbers, I'm not sure off the top of my head. You had the numbers, I think.
Oh, yeah. I read something where the average music consumer was worth about $300 a year prior to the digital services coming on. Now with the Spotifys of the world and all the streaming services, they have shrunk that value of the customer down to $120 a year. And so there's a gap there that the music industry has been fighting and trying to make up, essentially, to get back to the revenues they used to make.
And yeah, when you look at some of the companies that are in that segment of the market, their revenues continue to grow. So it seems like it's shifted money. Seems like people have, by downloading one song, they don't have to download the entire album.
Right.
But maybe they're going to more concerts. Is that?
In theory, yes. There's the record business and then there's the music business. The record business is what is kind of going away, that traditional model that we all have heard about for a million years, like record labels and selling CDs and packaging, and that's slowly going away. The music business is as vibrant as ever. You can see that with the success of all these festivals popping up and a lot more tours and more venues are opening up because of that live side of the business is still very vibrant and people are still very engaged and love music. It's just, the record business is definitely suffering from the change in the market. And
we've seen the venues grow from a few thousand people to Whitewater or the Gorge are 20,000 practically.
Yeah.
That in the music business, that's called the Shed. Is that?
Yes. They're called sheds. And all the amphitheaters are necessarily called sheds inside the business.
So tell us more about your business and where you are in terms of what you're doing.
Right now, we are working with several clients, basically to help them from a artist relations standpoint and also from a licensing standpoint. So, structuring and negotiating major label deals for the use of their catalog, for a couple services that are yet to launch, and then also helping out, some new companies work within the deals that they have. So, one of my clients has a deal with Sony, for instance. But what they found out is once they sign the deal, they're not getting any support internally from Sony getting artists to use their platform. So what I'm doing is coming in and helping them get artists to their platform to use their service, contacting them directly. Because I've been around for so long, I can help them navigate the the corporate structure of a major record company, because it can be challenging and it can be difficult, and you have to know your way through it to really be effective.
It seems like there's two sides to that. It's the artist side,
Mm-hmm.
and the artists will sometimes give away a lot of their rights.
Yeah.
And when companies are looking for somebody to what am I trying to say, where an artist will actually attach themselves to a company to promote a company, that part is also a difficult portion of
Yeah.
negotiation.
Yeah, artists, in order, record labels primarily act like banks. You have to sign away a lot of rights for them to invest in your career. And unfortunately, a lot of these major labels still hold a lot of sway when it comes to getting on television, getting on radio. They maintain that kind of stronghold. So if you ever want to get to a superstar status, without their help, you're really blocked, because they've taken up all the slots on the Tonight Show. The Tonight Show, pretty much you can't get on there. It's very difficult, and it costs a lot of money. And so without them, they just put artists in a position where they are still needed. More and more artists are going the independent route, which is great. And they can still be really successful. They're just not going to be as popular, is I think the distinction there. You don't get a Beyonce. I mean, she wouldn't be Beyonce if she did it on an independent label as a DIY artist. So it just wouldn't happen. But there are artists out there, Macklemore, for instance. He's an independent artist, but he still had to go to Warner Music to get his music on the radio. And, so there's that kind of, old school stronghold on major outlets and major exposure.
So it's also changed the evolution for the artist, because you do find some, I can think of one off the top of my head, who had a huge song in 1993, who's still getting rewards from that song. Baby Got Back. Here we are, 20-some years later, and that song is still generating revenues, and he's still doing concerts.
Yeah.
And whether it's with the symphony or whether it's doing it with someone else, he still continues that evolution, which in the old days, in the 50s or 60s, if you didn't record again or didn't have another big hit, you were done.
Yeah.
So shifting gears a little bit, you not only do Two Door Management, but you have opened a new club, right?
Yes.
Let's talk about that.
I am part of a new club that opened up in Kenmore, Washington, right just on the north end of Lake Washington, called Caps Club. We are a full restaurant, high-end restaurant, and live music venue, and we are laser focused on the experience and making the experience of the customer as well as the artist you know, superior to any other venue around. And, you know, the focus there is creating unique events, unique live shows, booking artists you may have heard of, but having them play in a way they don't typically play. So if it's an artist that plays with a full band, I would have them play acoustically or something like that. And also just offer a, you know, looks like there's a space for that part of the Seattle area. There's not really any music venues up there. We felt like there was a good opportunity, and people out there want to go see live music, and they want to experience those things, but they may not want to drive into Seattle all the time to do it. So that was the idea.
So, but it's more than just hearing music played. You do a supper as well, right?
Yeah, so it's a full restaurant. We have full kitchen service. We have a great, fantastic chef that has this really great menu. And, you know, full bar. The bar is open. The bar lounge area is open. The restaurant's open 7 days a week. And right now we're doing mostly live music on the weekends, so Friday, Saturday, Sunday. But coming here next month, they'll start to expand out to more nights so Wednesday through Sunday, looking to have live music.
So when did you open?
We opened last week. Last week was opening weekend. And it was great, and we had some great, fantastic artists, and everyone seemed very happy. And, you know, it's very stressful with the opening. I don't know if you ever opened a restaurant, but it's a very stressful endeavor. But we got through it, and we learned a lot, and this weekend is going to be great as well. So looking forward to it. So
tell people how they would find the club.
You can find the club. You can go online. It's CAPS Club, CAPPS. capsclub.com, or we're on Facebook and Twitter as Caps Club, and you can also purchase tickets through Ticketfly if you're online.
And they should probably make a reservation?
Yes. When you buy your ticket, you get a reserved table, so you get your own table that you can sit at and order dinner while you watch the show.
So Caps Club, CAPPS
Yes.
Club, up in Kenmore?
Yep.
Music, dinner, a tremendous experience.
Yep. Eat, drink, and listen. That's our slogan.
Eat, drink, and listen.
Yeah.
Thanks, Abe.
Thank you.
Best of luck on the club.
Thank you.
I hope it is a rousing success.
Thank you for having me. It was great being here.
We're going to come to a commercial break, so don't go away. My question is still, what was the biggest accomplishment of the Obama administration? I'm going to answer that right after the break.
Stay tuned. About Money returns in a moment with Mike Adams here on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Lots of people manage investment portfolios. Just a few can manage a successful portfolio and provide exceedingly great service to their clients. Here's Mike Adams from Adams Financial Concepts.
We believe the price you pay should be based on the performance of your portfolio and the quality of service you receive.
You know, Mike, it seems that a lot of companies subscribe to the one-size-fits-all mentality of investing. Does one size really fit all?
Not with us. Every portfolio that we manage is customized to fit each particular client's objectives and risk tolerance. We place our clients' interests first in all portfolio decisions.
If you're looking for a home for your seven-figure plus investment portfolio, call Mike Adams of Adams Financial Concepts, specializing in creating and maintaining wealth for over 20 years. 206-903-1019. That's 206-903-1019. Or log on to adamsfinancialconcepts.com.
About Money continues. Remember the website adamsfinancialconcepts.com. Here's Mike.
So the question is, what is, in my opinion, the greatest accomplishment of the Obama administration? Well, to understand that, I have to take you back to 1957. There were two engineers, Ken Olson and Harlan Anderson, engineers at the MIT Lincoln Lab. And they were working on machines that had control over the program. They developed a business plan, and they wanted to fund a computer company. Can you imagine today they had problems funding a computer company? There'd been a lot of small companies that had gone by the wayside that hadn't made money. RCA and GE had tried to get into the computer business and were losing money, couldn't make it happen. These two guys had an idea, and they had a business plan, kind of a business plan that they wanted to implement. At the same time, you had a guy by the name of George Doriot. He began his career as a professor at Harvard back in 1926, 30 years before this was to happen. Left Harvard, came back to Harvard in 1946 after the war, and at the same time he founded a company called the American Research and Development Corporation, ARDC. Prior to forming ARDC, the way that people funded new companies and new startups was through angel funding. We still see angel funding happening today. But, when you think of Alcoa, Hall was funded by Mellon. That was the way that you got funding, by angel companies. But ARDC was something that was different because ARDC combined a number of people into one single company that funded some of these startup companies. And these were investors who put money into this idea of Ken Olsen and Harlan Anderson. They put $70,000 into a company called Digital Equipment Corporation. That was the first venture capital investment. Now, when Digital Equipment went public in 1968, when they sold shares to the public, that $70,000 investment raised $38 million. Think about that. $70,000 into $38 million. That attracted a lot of attention. That attracted a number of people that began to put together these venture capital companies. And that was the beginning of the venture capital. If you look at 2007, companies founded by entrepreneurs, the little guys, backed by venture capital, in 2007 alone created 10.4 million jobs. Those companies generated $2.3 trillion in revenues, 18% of GDP. One out of every $5 in sales went to companies that were venture capital backed. In 2007, over 20% of all R&D was being spent from these firms that have been backed by venture capital. Large companies tend to make small improvements to existing products, but the venture capital companies are doing this disruptive technology, and they move technology forward at a very rapid pace. William Nordhaus of Yale says 70% of goods and services in the year 2000 didn't exist in 1900, and a lot of those goods were produced by venture capitalists. That was one of the driving forces that drove the economy and made possible this jump from Dow 1000 to Dow 10,000. From 1982 to the year 2000, a lot of the companies that drove the Dow up and drove the market up were venture capital backed. But venture capital is more limited today, and they're focused on much larger companies. So now the answer to my question. We'll get to the answer to my question. I believe that the greatest accomplishment that Obama will be remembered for is an act that was passed in 2012 called the Jobs Act. Not jobs for creating jobs, but jobs standing for jumpstart our business startups. That was, in my opinion, the biggest accomplishment he'll be remembered for. And what did that do? It created crowdfunding. Online investments from anywhere in the world for as little as $1,000 to have ownership in small, disruptive technology and non-disruptive technology. Small investors being able to create money to fund startup companies. And you know, today there exist almost 1,000 crowdfunding sites. This year, crowdfunding will raise more money than venture capital will. Crowdfunding will fund more startups than venture capital. Yale professor Richard Foster says in the 1920s, the average life of a Standard & Poor's 500 company was 67 years. If it started in 1927, it went until 1987. Started in 1930 till 1997. Those were the companies that were part of the Standard & Poor's 500 and lasted. You can think of them. Kodak, Johns Manville, those companies that were part of that. Union Carbide. All those companies, Woolworths, Westinghouse, those companies lasted for a long time. But now, today, the average lifespan of a Standard & Poor's 500 company is only 15 years. And the Babson School of Business says that by 2025, 10 years from now, 40% of today's top companies don't even exist today. And in my opinion, a lot of those companies are going to be crowd-funded. Not venture capital, some venture capital, but a lot crowdfunding. Crowdfunding is going to bring in significantly more money than venture capital will. And they will fund small companies, breakthrough companies, companies like Digital Equipment, which an investment of $70,000 grew to $38 million. It's going to let the computer companies grow. It's going to let the biotech companies grow. Do you remember there's Moore's Law? Moore's Law that talks about the speed of which computer chips grow. They double the capacity and half the cost every 24 months. Biotech companies are doing that every 4 months, 5 times faster. 5 times faster. There will be a tremendous explosion in terms of companies, and many of them will be crowdfunded. I think that's going to be the biggest accomplishment. That's one of the things that a lot of people don't look at. I can tell you that I was at the conference. No one at that conference ever mentioned crowdfunding. They mentioned a shortage of funding, but they never mentioned crowdfunding. Today, crowdfunding is bigger than venture capital, and we're at the very beginning of this process. Crowdfunding is less than 10 years old. Crowdfunding in the U.S. is 4 years old. We have a significant growth. I believe we are going to see the market grow from today's values to 100,000 or more. So hang on. We've got a good ride coming. We've got more to talk about as the weeks go by. Tune in next Friday because we'll have more on this when we come around next Friday. Have a great weekend. And if you miss any of this program, you can find it on our website, adamsfinancialconcepts.com. Have a great weekend and a great week.
You've been listening to About Money with Mike Adams, a registered investment advisor. If you'd like more information about what you heard today, or about Mike's investment philosophy and strategy, or if you want Mike to evaluate your own portfolio, click on adamsfinancialconcepts.com. That's adamsfinancialconcepts.com. The information shared on the preceding program was for educational purposes only, and any investment advice given may not be suitable for all investors. Join us again next Friday afternoon at 3 for more About Money with Mike Adams here on Business Radio 1300 KKOL.
The preceding program was sponsored by Adams Financial Concepts. Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's adamsfinancialconcepts.com.
Your business leader for Seattle is 1300 KKOL.
The following program